right. Sorry for the delay there. I had to actually really see if the thing is recording properly. So, guys, what's popping? So, without further ado, we've been talking about liquidity. I told us there are 4 types of liquidity that I use to trade. You understand? That is the fake out. The fake out, that's the most important one for me. The fake out that just takes out highs and lows. The fake out, Asian liquidity, or let's just call it section liquidity. You understand? We have the double tops and double bottoms, and we have the trendline liquidity. All right, just 4 of them. Before I say what I want to say about the trendline liquidity, because this video I'm going to be talking about the trendline liquidity, it's very short. I said we're going to be learning about 5 major things in the VIX strategy. 5 major things alone. Just keep these 5 things in your head. The rest things you want to learn about the market, let it just be complementary. Not that they're not important, every other thing is important depending on the strategy you're using, but for the VIX strategy, I just made these 5 major things to be the core pillars of the strategy, you understand, which is market structure. You also understand market structure. That's why I made everything aligned sequentially. I started from market structure. You need to understand market structure before you even understand what liquidity is. All right, market structure, 1. Then we started talking about point of interest. That's order block and Fibonacci. You know, order block and fair value gaps. Yeah, market structure, order block, fair value gap. These 2 are point of interest. Then we have the Fibonacci retracement tool that we talked about. That's the 4th one. That Fibonacci retracement tool is just like an added confluent. After you've known your directional bias of the market, you found a POI that you want to short from or you want to long from, be it fair value gap or order block. But do I explain order block? Watch that video very well. Order block and fair value gap, they work together for me. Then the Fibonacci retracement tool, let it be complementary, you understand. Then finally we have the liquidity. Liquidity is like the last thing you ought to learn in the strategy, you understand. If you don't understand how to mark up your point of interest, how to identify the directional bias of the market, please don't even go to liquidity and start saying you understand liquidity. Liquidity is a very deep topic. I'm the one that is just picking some major things that you ought to know about liquidity, you understand. As you progress in your chart, you understand liquidity better. You understand? Yeah, that's that about that. So trendline liquidity. So for those that already know what they are doing in market structure, so let's go straight to the business of today. If you look at my left hand side of this drawing at my left hand side, you see it's clearly a bullish trend. This is clearly a bullish trend, all right? You see our higher highs, our higher low, higher highs, higher low, higher highs, and higher low. You know the market does not just move smoothly like this. That's why I made these little gallops here for us to understand how the market moves in the live market. All right, so for the trend line now, let me digress a little bit, please. I don't like the way I'm digressing, but sometimes I need to digress like this to make a point so we understand what I'm talking about. When I'm talking about trend line liquidity, I want you guys to understand that I'm not in any way demeaning support and resistance. I'm not demeaning trend line trading and support and resistance trading. I use support and resistance. And I use trend lines to know where to put my liquidity, but I don't trade trend lines. I use them to know how to spot out liquidity, and they work actually. But as a smart money concept trader, more of the what we call retail, all of us are all retail traders, you understand. But what we call retail, the ones that use the patterns to trade, the trend line to trade, the support and resistance mostly to trade, even the lower time frames. That's what we know to be the retail traders. And those are the first type of traders that actually really came to be, you understand. And the way they trade is quite very popular and famous now. That's the big boys and the market makers already know how these guys are trading. So they want to liquidate them away from the market. They already know where they put their stop loss. They put their stop loss above the resistance if they want to sell. They put their stop loss below the support if they want to buy. So basically the market makers know all this thing. They put their stop loss beneath this trend line if they want to buy, and just like the market makers already know where all the stop loss of the traders are. That's why you hear things like immediately the market took me out, started rushing towards my direction. It's called liquidity. The market just liquidated you. You understand? Yeah. So without too much, this drawing might be complicated, but please pay attention to understand it. All right, so this is a higher time frame now, you understand. We have our higher high, our higher low. We had a higher high, our higher low. Now we drew our trend line. That's, remember what retail concepts always, or the law of retail concepts in trend line. The law of retail concept in the trend line states that once the trend line once the price has rejected off the market once, let's say you draw a trend line, once the market has rejected off the trend line once, twice, if it's coming to reject the third time, you take your position from that place, you buy from there. That means, you understand, yeah. But most likely than not, this period, if you check the way the real market moves, immediately the price has touched the trend line once, twice, it's coming to either break the trend line to change market structure, or break it, touch a stronger POI, then go up again. You understand? It's just liquidating people that are expecting the market to bounce the third time. You understand? And most time, the market will look like it wants to reject off that third bounce. Most of the time, it will look like it wants to reject off that third bounce. That's why confirmation before entry is very, very important. Like, seriously. Retail concept, I don't even know what they use for confirmation again, if it's candlestick patterns or what, I don't know. But after that second touch, the third touch is most likely going to break the trend line. That's what happened here. You know, they say the first touch, you know, the second touch, then the third touch will enter our buy from here, but the market will break this structure. Most likely it will break the two lows, with the first low and the second low. Look for a greater point of interest, majorly a fair value gap or order block in this region here. It might be a support region, who knows. It might come back to this region, order block or fair value gap, before going back up. This was not a break of structure. That's why this scenario here always happen in the lower time frame, like say 5 minutes, 15 minutes, 30 minutes at most. Yes, that's why it's good to understand the directional bias of the higher time frame, so you can work with the lower time frame. In the higher time frame, this can just be like a normal stuff, like a higher high like this. You understand? Then just continue going. But when you come to the lower time frame, that's when you start seeing, you know, all these breaks and breaks and breaks, and liquidity thereabout. For someone that, like us, that don't have patience to wait that long to swing trade, we just want to swing. That's why we are very, very technical. Like, seriously, the market will look for a stronger POI. That's why, if you notice, I like other blocks that, let's say for instance, I spot my order block at 30 minutes. If I go to 15 minutes again, that same place I mark my order block, I like seeing another order block in that 15 minutes again. If I scroll lower to the 5 minutes or 3 minutes, I like seeing another order block where I still marked that order block from 30 minutes, 15 minutes, 5 minutes. Then I'll know that this other block is a very valid order block. Then regardless the order block that is here or here, I will ignore it. Then just put my POI here, because clearly the market is going to clear out all those order blocks. Sometimes it might just react a little bit. If there was an order block here and there was an order block here, the market might just react a little bit here before coming down, react a little bit here, then before finally touching the POI, then going up. You understand? Same goes for the bearish scenario also. The market will most likely break after the third touch, like seriously. After you mark your trend line from the highest high, like they say, after you touch it the first time, touch it the second time, the third time, once touch, enter there. You cannot just be entering new markets just because of only trend line confirmation. It's very risky. Allow the market to meet all your confirmations. Then if you still lose the trade, you know you followed your rule. You understand? Yeah, so that's that about that. So let's look for an example about this. I don't want to stress this one too much. This one, it really happens. But when it happens, you know, liquidity is knocking, and it should be very. Oh, I marked, God, thank God, I marked this trade. Actually, this is a GBP USD. See what happened here. There was something like let me see. All right, see what did extend to here? No, it didn't extend to this place here. This one self, it's kind of broke structure, but like we'll say, basically the trend line, you can draw it from anywhere. Like seriously, this was a bullish trend market, so we're looking to buy. All right, we're not looking to sell in this market regardless, though most Trendline traders. I used to do it before. I'll put the trend line both up and down. I don't know what I was looking for them periods, but I used to see people charts look like that. So me, I'll follow suits and do like that also. I don't know what I was looking for. But the thing is just that, see what happened. You draw a trend line from this lowest point here. The market rallied. Okay, didn't touch it here. It touched it here. You're looking, even this one, it didn't even wait for the second touch itself. After is the second touch. Some people might want to buy from the second touch. I don't want to wait for the third touch. You understand? Because they say, okay, the third touch might break it, so let's take it off the second touch and see what happened. The market gave this green candle here, like it wanted to reject, then just breaks it through and come to touch. See this guy here, this is a valid order block. And do you know what I said in a valid order block? A valid order block must have an imbalance. It must not have been mitigated before. It must break straight structure in some kind of way. Go and watch the videos on other block that I made. Very, very, very insightful. Like seriously, very, very insightful. All those properties, of 5 I mentioned, the other block had to have it, and it should be engulfed. Like the next candle that is covering the other block should cover the whole other block completely. That's why I say, see, this liquidity of a thing, if you don't understand market structure, don't even near this topic at all. It looks a little bit hard. But if you understand market structure and if you understand a little bit of liquidity, this is just complementary knowledge. We are not trading liquidity. We're just looking at the markets from a standpoint of liquidity. All right. That's that about Trendline Liquidity. You can go to your chart. Okay, let me give another assignment again. There's an assignment I gave on Fibonacci that anybody that watched the Fibonacci video finish. Then I gave an assignment at the end that if you reach me back and give me this assignment, that's why I put the assignments in the ending. I have a gift for a person. Only one person in the group came back and dropped the assignment. I have to give the person the little gifts. You understand? Yeah, this one I'm giving the same assignment again. If you come to if you actually really watch this video to this point, just come to my DM. The VIX community now, like seriously, though now if you're in the YouTube channel and you're not in the WhatsApp group, you might need to drop your WhatsApp number so we'll add you to the WhatsApp group. But if you cannot, you can just, I don't know, YouTube don't do that. There's no way you'll be able to reach. But this assignment is for the VIX community, for those that are in my WhatsApp group. Actually, this assignment is for them. If you reach this part of the video, the same example, go to any chart of your choice, look for Trendline Liquidity, mark it out, show me your POI that's the liquidity entered. The market has already played out already. Show me both the bullish and the bearish trend market, screenshot it and send it to me. That's the assignment, and there's a little gift waiting. You understand? So that's basically that about that, guys. So cheers and God bless.